Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for August 12th, 2016. I'm Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. Prices continue to hold up here near highs. The previous session, we actually saw prices push back above the 2172s and continue to push back higher and actually reach new highs. And right now, we continue to see these prices holding near the upper edge of the expanding cone here. Prices continue to just sit up here at highs and haven't really seen any reaction either way right now. To be honest, this has been one of the tightest ranges we've seen in a very long time, with one wiggle here backing up. But for the most part, the price ranges are very, very tiny and not a whole lot of activity right now. And it makes for a very difficult market to trade. In this range, we were just trading mostly, 54s back to 68s and back. And once we got this move outside of the range, that was pretty well forecasted. But now, once we got this other wiggle up, we haven't really seen a whole lot. So, there's really not a whole lot of meat to this bone right now. And we got to wait until something really clear presents itself. And unfortunately, right now, there's not a whole lot to trade. Again, I mentioned before that I was looking for another push back this way toward 2135 to 2140. We could still see that move, but it doesn't appear that the market is quite ready to see that just yet. And you also have to know that we've been in a very, very bullish market right now. Every pullback has been a buying opportunity, and we haven't really seen a whole lot of pullbacks just yet. We do have a very nice balanced profile that is developed here at these highs. And if there is rejection up here, 2188.5 may be the level to watch here for a sign of rejection. That could be a sign that we could rotate back across this D-shaped profile. All right, taking a look at the intraday time frame right now, we just had some news come across. There's going to be a whole lot of news coming out right now. Just within the next 90 minutes, you're going to have all the reports coming out. But a little bit of news came out. Prices dropped here a little bit. And what we're watching for here again is that 2188.5 is an important level up there. Short term right now, you can see a little bit of a rounded off pattern playing out right now. I think if there's a failure to hold above 2180, there could be a shot at seeing a rotation back across the range toward 2172, at least short term. But again, pullbacks right now have been buying opportunities, and you really have to be patient about waiting for your levels. So right now, I'm going to wait here to see how this thing plays out early on. Again, if you see 2188.5, that could be an area right there to watch for rejection. All right, let's take a look now at crude oil. Let's bring this to a daily time frame right now. Crude oil, yesterday, that squeeze was aggressive. That was about the most aggressive short squeeze I've seen in a while. It was a program-driven trend day that was relentless, and it didn't stop until these highs were taken out. I mean, that was the way it was. We had lows here that were rejected, and then after that, we saw a breakout, and it just squeezed throughout the session until the highs were taken out. This morning here, you see even new highs being taken out again. Unfortunately, sometimes that's the way it goes. So if you get caught in a short like that, you have to be able to release that short. I mean, what I mentioned before was 42s was an area to watch, and then 43.40 was a zone to watch. Rather, 42.40 was a zone to watch here to defend. But above that, it's just the bulls take over. Before, what we also talked about was this 44.40 to 44.50 zone. A very clear area of support there. That was the area that gave way before we saw that significant decline into 39s. I mentioned that prices could bounce all the way into that level and still be considered bearish for a longer term decline. So right now we're coming into that zone or very close to it, and you can see a little bit of weakness coming in off these highs right now. So while we did have a significant squeeze yesterday, prices continue to remain within this downtrending channel, and at some point here, when you see that rejection, it may be time to bring this thing back across the formation. Let's take a look at the intraday time frame. On an intraday basis here, you can see that prices are holding near these highs. So here's the relentless squeeze from yesterday's session. We had the breakout from this tightly coiled pattern here. Here's the breakout from that pattern, and it was a program-driven trend day the entire way Once it found these highs, that's been support now for the last afternoon plus. It's 43.30 support. You have 44.20 up here, and now you have this trading range that's built out up here. So short term, the idea is likely to play the range. You can see there's been a rejection above the previous session's high, and then a retest has also been rejected. So short term, you can see that bears are trying to keep a lid on 43.86 right now. So that's likely the area that bears are trying to target. Bulls trying to keep 43.30 bid for a rotation higher. Eventually, a breakout from this range could spark the next key move. So a failure to hold 43.30 could open up a return back toward 42s. And holding above this level, again, we have that 44.40 above. That's the next major level above, where if price reaches that zone, you're going to see bears really try to keep that area defended. All right, let's take a look now at gold futures. Here's a look at gold. We had a big time move up here intraday. If we look at this thing on the daily time frame, one thing I mentioned before was while the idea was that prices were in this range, it's very difficult to trade anything with decision here in the middle of this range, and that's kind of where we are. It's much easier to look at the edges of the range and then fade those edges, because that's where the opportunity is. That's where the edge is. And right now, while this looks like it had another shot at going lower here, you had to know that this thing was a little bit more choppy in the middle here. And that's what we kind of saw here. We saw some weakness down, and now we're seeing that move come right back up, especially after this news. Again, not a lot of great opportunity in the middle of this range at the moment. And while I still believe that there could be a little bit more weakness here to the zone, we're not really seeing that play out just yet. We're seeing a little bit more chop still after these recent highs we're seeing. So again, the best zone to watch for rejections are above 1370 to fade it back down, and then also again 1310 and 1306 to fade it back up. Until we see those zones, there's really not a whole lot to do right now in gold. All right, let's take a look at the NQ. The NQ has a significantly tight range here. Obviously, there's still news to be seen, but this range here, very, very small. The high of the day so far, 48.05 quarter. The low is 47.96. So it's not even a full 10 points of overnight trading. That's just a very tight range. That could make for some very, very boring type of trading. And again, if the market's not really moving a whole lot, you have to kind of be patient about your opportunities. We do have a very, very tightly coiled range that is played out up here on these highs. And again, fading the edges of that range makes the most sense. And new highs, new lows are usually to be faded. So right here, if we hit 48.20, that could be an opportunity to fade it back across the formation. Anywhere in about 47.50 could be an opportunity to fade it back up. But unless those edges are met, right now it could be very, very difficult to trade anything in this range. On an intraday basis, here we are. Here's the intraday. Again, here's the tightly formed range here, not even a full 10 points. Right at the apex for the most part of this this formation here. And one thing you can watch is watch the impulse range from here to here or from here to here, and look at the high, low, midpoint of that range. Right now we have kind of a neutral formation that's been building out, and that could spark a nice breakout move at some point, especially given how tight this range is. But short term, you can see the range here that I talked about, 47.65 here, 48.10 there. Again, if there's any rejection above 48.10s, it could be an opportunity to bring it back toward 47.60. Any move into 47.65 is a great buying opportunity back up, as this market has been super bullish. So every pullback is a much stronger buying opportunity than the buy and sell opportunity. So continue to watch these edges very, very closely as we head into the rest of the day. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck, trade well, and happy Friday.